Entrepreneur Shares CEO Joel Schulman. Joel, good to see you. Thank you for joining us. To what do you attribute this reversal of fortune in markets this morning?
Well, I mean, we're seeing the markets somewhat. They bottomed out late February. They've been picking up in the last few days, and I think the markets are anticipating that the worst is behind us in the war in the Middle East and Iran. I think we're going to see, today, very little change, very little surprise in the afternoon. Nobody's really expecting the Fed to change rates. They're going to keep it solid at the same level probably for the next few months. I think the markets are gearing up for a second half. We're starting to see some of the positions that were there was risk off between October and just late February. It's starting to come back now, and I think we're going to see a lot of these securities come back just like they did a year ago. A year ago, we saw April to October, our index was up 60%. It was down February to April last year. And I think we're seeing a similar type of recovery this year. I think this is going to be a second half year.
Well, I mean, look, I'm with Adam Johnson this morning. And Adam, the Federal Reserve's rate decision is out this afternoon at 2 p.m. Eastern, widely expected to hold interest rates steady. And yet one of the Fed's key mandate is employment.
Yes.
And we know that AI has been affecting job creation and sparking job cuts. Why is the Fed cutting rates right now?
Well, they're not. I mean, everyone thought they were going to cut in March, and then that March cut got moved out to June. The June cut got moved out to December, and now it looks like December, yeah, maybe kind of, sort of. So it's been a ratcheting down, which is why President Trump has been putting the heat on Jerome Powell. President Trump wants the Fed to cut rates because that will be helpful for spending and therefore midterm elections. But we still have an inflation issue, and of course, in another 2 minutes, we get evidence of that.
Well, let's be clear. This PPI number is for the month of February. We will not see the effect of the spike in oil prices in this particular report. That will likely be the March and April report.
Yes,
so
that's right.
We're not going to see any spike here. However, the PPI, of course, the underlying components of what companies pay are going to be in this number. And we did see some elevated numbers aside from the war. Isn't that right? Joel, what are you expecting?
Well, I'm expecting slightly elevated. To your point, we're going to see next couple of months it peaking. Oil's bouncing around 100. Obviously, anytime it falls below, we're seeing the markets move up. Anytime it's a little above, today it's 105. It's going back up. But we'll see elevated PPI for the next couple of months. Again, as you point out, the oil lag. But we've got to remember housing is a big mitigator when we go to CPI, not PPI, but CPI. Housing was down. It was up only 0.1% last year. That's the biggest driver of CPI, which is not something we're going to see today. But overall, you mentioned the jobs effect. Yeah. That's been somewhat muted. And we also see that housing is down and spending's down. So, I think it's going to be second half. I think it's going to be earlier than December for a rate cut. I think the fall, we'll see one, possibly two this year.
Well, we should point out that while you're talking about what's been down, we just spoke with Jameson Greer, and he made the point that wages are up. And that is a major factor here with wages going up. And we are on the doorstep of tax day, April 15th, where we spoke with the head of the IRS recently. And Frank Bisignano told us that the average tax refund check is $3,800.
That's a record.
Is that incredible? $3,800. That's real money. You get a check of $3,000 in the mail?
Yeah, I mean, that's a big number. It's a promise kept.
Yeah.
And that's something politically that this administration can check off another deliverable. In the midst of all of the division over the DHS funding and everything else, there are so many positives right now happening for the Trump administration.
We're also waiting on Kevin Warsh's Senate confirmation hearing. We don't know when that is. We're told it could be on pause until this probe into Jay Powell is closed. So we'll wait on that. But there's full expectation that Kevin Warsh gets in and starts cutting interest rates. Let's watch this market at these numbers at the tape right now. The Dow Industrial's down about 16 points. Again, we are waiting on the producer price index out any second here. Cheryl Casoni with the numbers. Cheryl.
These numbers are much hotter than expected, guys, for February PPI. Month over month, a 0.7% jump. Street was looking for a gain of 0.3%. Year over year, we came in 3.4%. Annualized basis, the Street was looking for 2.9%. That's the reading that we got the month prior. So again, hotter than expected. expected. We got 0.5% for core month over month. The street was looking for 0.3% to the upside. And then we came in core year over year 3.9%. The street was looking for 3.7%. There's the markets are reflecting what we're seeing here as far as these numbers. I'm going to get to the report. I'm going to see what the government is saying here about where this rise was, because it wasn't energy last month. I can tell you that from memory. What they're saying here is, okay, so for final demand goods, we saw an increase of 1.1%, biggest rise we've seen since August of 23. 40% of that is final demand goods, 2.4%. Energy and final demand goods, less food and energy, also increased. So that's where the story is here as far as these numbers. Also, they're talking about final demand services. There was a 5.7% drop in prices for travel or accommodation services, food, alcohol, wholesaling, dealing, investment advice, all in this report. I'm getting the wrap signal, Maria, but there's a lot to go through, a lot to talk about in this report.
Well, I think you're spot on there, Cheryl, because remember, in the month of February, services prices were going higher, and we've talked about that. Services prices were going higher. There were a handful of commodities like what? We were talking about gold. We were talking about silver. All of those things were going higher in February as well, putting oil aside related to the war on Iran. Joel Schulman, your reaction to these numbers, and I should point out we haven't seen such a significant impact on markets. Dow Industrials were negative going into it. It's still negative.
Yeah, this is not good. We're going to see the markets off today. Your guest mentioned that he thought the rates would be dropped in December. I thought they'd be earlier. This is pushing things back at least a couple of months. So this is going to be negative for the markets, and we're going to probably see the markets ticking down even further, next couple of days. So this is not good news, and we know that the next couple of months, we're going to see elevated prices because of energy.
All right. We are an hour away from the opening bell, and the Dow Industrials now down 105. Joel, good to see you. We'll be back.